The Bank of England has voted to hold interest rates at 5%, with policymakers signalling that they would take a gradual approach to lowering borrowing costs over the months ahead. 8 members of the 9-strong Monetary Policy Committee supported an interest rate hold, with only Swati Dhingra backing a second cut. The decision was widely anticipated by markets, although the odds of a further 25 basis point cut had crept up slightly in the days leading up to the decision. Some investors thought the MPC might be tempted to wade through a second rate cut after the US Federal Reserve opted for a bumper 50 basis point cut last night. Analysts interpreted the Fed's move as a precautionary cut to ensure the economy did not suffer a major deterioration. And while the Bank of England did not follow the Fed's lead, Andrew Bailey, the bank's governor, flagged that further rate cuts were coming. He said, "The economy has been evolving broadly as we expected. If that continues, we should be able to reduce rates gradually over time." The decision came after figures out yesterday showed inflation remained just above 2%, pushed up by strong services inflation. Services inflation rose to 5.6% in August, up from 5.2% the month before, with the increase fueled by a very big monthly increase in airfares. Services inflation is the one to watch, with policymakers flagging this as a key gauge of domestic inflationary dynamics, given the predominance of the services sector in the UK economy. But most economists think August's large increase is likely to prove a temporary bump. Bank officials expect the measure to ease over the remainder of the year, even though the headline rate will pick up slightly. Nevertheless, the minute showed a range of views about the likely persistence of inflation, with some members worried that price pressures could prove more entrenched. These members were worried that the economy might have experienced structural shifts, such as changes in wage and price setting following the major supply shocks that have been experienced over recent years. Despite this, the majority of members thought the current level of interest rates was appropriate, and Bailey cautioned that the MPC needed to be careful not to cut rates too fast or too much. So, what does this mean for you? Mortgage and savings rates are unlikely to move a lot in response to this decision. That's because it was widely expected. Interest rates are also likely to continue falling in the months ahead, which will push mortgage costs lower. However, the bank's relatively cautious tone means that households might have to wait a bit longer to see those lower mortgage rates. Larissa, Director of Personal Finance at AJ Bell, said some first-time buyers might wait for further interest rate cuts this year before buying a new home. For more analysis and commentary on today's interest rate hold, head to cityam.com or download the app.